Today is April 11th edition of Back Roads of Illinois with Cesar Delgado. We're Central Illinois agriculture source and the agricultural industry in the Midwest alongside in Central Illinois. I visited Jim Sutton from U.S. Export Soybean Council. We talked about soybean demand for the U.S. soybean farmers in the Midwest. This morning is going for the World Agricultural Supply and Demand Estimate report from the Department of Agriculture. We don't expect a lot of changes in the report. I talked with Todd Gleason from the University of Illinois Extension in Urbana. We talked about they just make sure to check with safely plans for the university. You can catch up with those interviews with them on my YouTube channel. This is your agricultural news on Back Roads of Illinois. Chuck Grassley and Chuck Schumer in the Senate floor. Senator Grassley pushed the Farm Bill get passed along with the Senator floor. The Republicans rejected to fund the SNAP program. HPI will be not so good with the cattle markets for today's cattle expansion report on Thursday's afternoon. Bird flu is affected by the cattle markets. The farmers and ranchers want to see common sense to EPA biofuel and trucks. They want to see the EPA set up with the ethanol industry. This is your agricultural news. We were back with Mike north of Everett in Platteville, Wisconsin. How are you, Mike?
Very good, Cesar. Good to be joining you.
Let's start with the World Agricultural Supply and Demand Estimate report on this morning from the Department of Agriculture. Could we have your opinion on that?
Absolutely, and as you look at this report, let's kind of build some framework around it first. So first off, this April report generally doesn't bring a lot of new news to the table. It generally doesn't give us a whole lot of new information. It sits on the other side of a prospective plannings report and a quarterly stocks report. End of day, this one doesn't really entertain a lot of new information. So, next month going to be a kind of a different story, but kind of to give you a really broad look at it. Beans were a little bit bearish. USD didn't really change the Brazilian numbers very much. I think the market was kind of looking for some sort of grand display of change, but we saw very little there. Coming into this, I think a lot of people wanted to see a number on Brazilian production that came closer to 150. We just didn't get that. So that takes a little bit of the noise out of the marketplace. And frankly, as you look at kind of our next step, we're going to be, I think, really just kind of throwing all of our cards at weather forecasts and the May report, where we get a look at that 24-25 balance sheet. So not much to really point out in today's report. Like I say, not much change there.
I saw it on this morning. It is pretty neutral for this report. It was two. One BUBAC/AC.
Yeah, and that's why you're getting the performance that we had, right? Corn down to nickel, beans down to nickel. There just wasn't anything to throw a wrench in the works. So yeah, those slight changes is what's led to a very quiet marketplace.
How is the expectation for the acreage report on June 30th and March 28th? Could
You
you
know,
give us insight of that?
yeah, that's a great question, Caesar. Ultimately, when that first plantings number comes out in March, let's understand that it's a surveyed number. Survey is put forward in the first half of March. We were just coming through low prices. Um, we saw lower than expected numbers for sure on corn, which, if you take those and work them through the system, that still leaves you with ending stocks that are north of 2 billion. But, people were expecting a slightly larger number than what we got, which the market responded the way it did. But the reason they come back in June and reissue that number in the acreage report is because, frankly, a lot of things can change. Prices can change. And, certainly coming out of the backside of that prospective plantings number, we saw a little bit more incentive for the the market to bring corn acres back to the equation. Will it be a ton? Perhaps not. But the other thing that we saw here in the last couple of weeks is a forecast that starts to suggest that we're going to see some, wetter conditions over the next couple of weeks, which may hinder some of that corn planting. So, you got to take a little bit of a balanced approach to how look at what goes in the ground. And frankly, that June number will help clean up anything that got missed in March. But here's the thing to really be watching. There was 6.3 million acres that were missing, so to speak, that we didn't put anywhere. So, where do these 6 million acres end up? Well, maybe they end up in corn. And, if you listen to forecasters, they're kind of saying that last week of April and going into May may start opening the door for some planting progress. Maybe that invites some more corn acres to be planted. If not, maybe then by default we end up going over into soybeans. But maybe we pick a little bit up in wheat. Maybe we pick up a little bit in specialty crops. It's hard to say, but generally speaking, when conditions are good, when fields are prepared well, those missing acres, and this is not a new phenomenon, by the way, will often land inside of the principal crops, those being corn and soybeans and wheat and oats and barley and things of those nature. And as we talk about corn, it still, as we've often heard it said, it's still king. So
today,
yeah, so if we look at how things settled up in Chicago, spot cattle was 180 and a quarter, up 117. But as you look out towards fall, slightly lower prices, which is really how we've been kind of keeping this complex structured. Higher nearby prices with softer deferred prices that build themselves again up into a seasonal spring high. And that October price, 174 and 57, ultimately at 174.57 still marks values that are equal to those 2014 all-time record highs before we blew them out of the water here this last fall. Really, really strong markets out there, and that is allowed to carry over into the feeder cattle complex, which in that April spot market, it finished 239.17, up 90 cents. Further out into summer, that SEP contract 250.27, up $1.17. So still some strength there, but I think one thing to really take notice of is that as we came through some of the noise around the avian flu and finding its way into the livestock community, that market sold off quite precipitously last week, Monday, rebounded through the week, and then had another sell-off as we came back through the Friday trade. And so, this week we've been trying to recover, and we've been seeing some of that happen. Still some questions as to how consumers respond. I think the message that's really super important to put forward is that food safety is still 100% secure. We still have no concerns around the consumer's capacity to confidently buy a safe product. It is still very much intact, and I think the markets have come to appreciate that. Really, the question that lives out there is how on the backside of this, what will the spin look like, and are there going to be some creative journalists that try to make a story where there isn't any, and what kind of consumer response do we get? We feel really confident that there's not going to be one, but it's always hard to tell. You just don't ever have the capacity to fully predict that. And then, if you want to cross over into the hog space, hog markets today in the nearby, the April contract down 30 cents, 91.45, while that summer market, which is generally marketplace, an interesting thing to observe, right? When we go through this beef price cycle, those elevated calf prices are very good for the cow-calf operator who's got calves to sell, but probably one of the chief concerns for those who are backgrounding and finishing cattle, because who wants to be caught holding a very expensive calf falling beef market? It's a tough find yourself. But yeah, calves having a positive day today, but really kind of building on that downtrend that started here about 3 weeks ago. We're trading calves in fall for 270 to 275 for a couple of months. That fell apart, and over the course of the last 3 weeks, we've taken about 20 to 30 bucks a hundredweight out of that calf market for fall pricing, that is.
What are the cattle herd? It's going to have the bird flu from the flock. What do you recommend for the farmers and ranchers in the markets?
Well, I think prudence is the first order of business. And as you look at these particular prices, we talk about being off of our highs, and we talk about the markets over the last few weeks moving lower. But I think it's important to spell out that even at these levels, again, we're back to what was considered an all-time record high up until last fall when we set new highs. So we're in really good territory. We're still at really good prices. And while you never like to see the market go down if you're in the business of selling cattle, it happens. And often when you get to record prices, they become more vulnerable to different events, different stories, different happenings that come in, shake them real hard, and send prices lower. Because it's easy to keep consumers' interest when prices are low, but it's not as easy to keep their interest when prices are high. And then when you add other events to the mix that jeopardize the flow of volume, that just adds more fuel to that fire and puts more jeopardy in the sustainability of that high price. So our recommendation is very simple: manage price risk. And we have all sorts of tools to be able to do that at the exchange with futures and options, by way of insurance using LGM and LRP. There's just a lot of really good tools out there. And certainly, if anybody doesn't understand how they work, we'd invite a call to help guide that understanding and help people work their way through that particular process.
Finally, what would happen if trading is lower for the commodity prices, especially on the corn? Do you have some advice to the producer?
Yeah, and I think the same message should be shared there. The difference, of course, is that corn is not at a record price. If you look at corn and soybeans both, we're well off of some of those elevated levels that we saw in 2021, 2022, and into early 2023. However, if you look at the balance sheet and you talk plainly about what history says fair value is for corn in these type of supply situations, history would tell you that corn price should be somewhere between $3.50 and $4. Well, I may not be advocating for the market to go to that, type of price point, but while we're sitting here with spot corn prices that are trading right in that neighborhood of $4.50, and you've got pricing out in the fall time frame at 470, 480, which obviously some of that has fallen away in the last few days, spot pricing falling back to closer to 430, and new crop, as I called out earlier, being back to 466. These are markets that are historically inflated relative to what history says fair value is. So even though we're off our highs, that doesn't mean you stop managing risk. Risk exists regardless of how much you love the price. So, as we talk about prudence here, even though it's not record, you still have to manage what's there. And as we look at cost of productions with our clients, what we find is that even with 466 futures in December, many of our clients are still making money here. Not all, everybody's cost structure is a little different, but you need to manage risk. So using options, making forward sales on rallies, attending to the opportunities as they come, still very, very prudent.
I hope that we were having a good growing season for this season, not too dry or too wet.
Well, I sure hope so too. And quite plainly, I'm looking forward to these next couple of weeks where I can get in the field and get some corn planted of my own. But as we talk about the way things are shaping up, I'm feeling a lot better about the setup than I was a few weeks ago. Following some rain and some snow, and with warmer weather on the horizon, things are really starting to take shape.
Thanks, Mike.
My pleasure, Cesar.
This is Mike north of Everett in Platteville, Wisconsin. We were back with our last segment on Back Roads of Illinois. Welcome back on Back Roads of Illinois. Thanks, Mike north of Everett in Platteville, Wisconsin. We were talking about the World Agricultural Supply and Demand Estimate Report. I mentioned earlier that includes all applicable such information as available for the farmers and ranchers. Well, folks, there is your today's program. See you tomorrow for Back Roads of Illinois. I am Cesar Delgado. Have a good day.